account, the Pair Protocol Twitter account, and on YouTube as well. Let me just ping the team and see if they can hear us.
Cool. Let me retweet it once you put it out. There it is.
So welcome to the stream, everyone. Doc's just retweeting on his side, and I'll do the same. And today we are blessed to have my dear friend docXBT to come on and talk about the markets. Maybe we can share some thoughts, and either we're very aligned on where we think the market's going or we're not, which will be an interesting debate. And then we can talk a little bit about how you think about pair trading and stuff like that too.
100%. How you doing, brother? It's been a minute. I had you on my stream like a year ago, so it's been a minute since we've talked. Well, not a year ago, but it feels like it's been a while.
Yeah, we've had a couple of these. I think I've had you on the podcast once or twice. I was on your live stream, and then you're here now. So we're kind of used to this format. It's been a tough year, I think, for a lot of people. I made a call about a month ago to just not trade directionally. Because I was of the view that there was a lot of revenge trading happening in the books, and what showed that to me was the fact that like price was just going to wherever there was liquidity, and liquidity was wherever there was stops. And I don't really like trading if there's not that much of a trend. So I had the foresight to do a lot of like long Bitcoin, short alts kind of stuff. So long Bitcoin, short SUI. That was one of my better trades this year. But generally just doing fewer trades, and all mostly have been pair trades. I've done a little bit of longing back in January, but I'd say net I'm like slightly down on the year if I'm being completely transparent. But it's been really tough for a lot of people around. So I'm pretty happy with like that outcome, to be honest.
Yeah, the general vibes, it's weird. It's like Bitcoin bull market, altcoin 2022 bear market, right? It's kind of a crazy dichotomy in the market right now.
And I don't see it changing for alts. I don't subscribe to this idea that you're suddenly going to get an influx like 2017 or 2020 of people trading alts again.
Yeah, I think the issue for the most part of this cycle is we had nothing to believe in. Last cycle, coming in as a tourist myself, the buzzword of DeFi was pretty fantastic, right? Like I really bought into that for a bit, removing yourself from the traditional banking system, getting yield in your assets, being your own bank, self-custody. All these narratives were so massive, and I think we did a poor job this cycle of innovating. And we eventually devolved into just the financial nihilism of just meme coin casino. This is the casino, don't cry in the casino. And it's hard to get people to believe and hold in any kind of altcoin asset if that's the narrative surrounding it. If we're all just openly saying all of this stuff is garbage, why would anyone come in and say, no, it's not, I'm going to hold this thing. I'm going to see this vision out, right? I think there are still a few alts in the market like that have these aspirational futures, but yeah, for the most part, I think that was the major difference. And a lot of people that I look up to and think are very wise in the market are saying that we may have a big return to value here in crypto, or at least return to fundamentals, which I think would be very refreshing, be a newer way to trade. And unless we get that, it's just going to be more of the same. I agree with you.
I also think one of the market structure kind of things that has changed is the introduction of ETFs. So even though you've had new money coming into the ecosystem, and you've had this wealth effect where like Bitcoin holders have felt wealthy and have looked to get some beta in the form of altcoins, in 2017 you had to go to an exchange like Binance or Coinbase to buy Bitcoin. In 2020 the same thing, right? And so these people, these retail people who were there, they were in the casino, but the casino was the centralized exchanges. And then these new launches were popping off, and there was capital and a wealth effect at play there. Now, when people are purchasing these ETFs, it's like in a brokerage account somewhere, right? There's nowhere else for it to really go. Like parallel to what's sitting in their brokerage accounts are their equities and bonds, and they're pretty happy with that. So I do think there's been an element of market structure change with ETFs, and the fact that there has been billions and billions of inflow, albeit some of it being basis trades. I don't think you're going to see this trickle down effect anytime soon into altcoins. And you're right, people have just become skeptical. It's become like a self-fulfilling prophecy. So
Yeah.
interested to see where you think the markets are at, maybe starting with the king itself.
Yeah, 100%. So the TLDR, without going into too much, is this still looks like a very strong high time frame uptrend to me, right? I can't make the case of it being in a high time frame downtrend just based on the weekly trend, the weekly EMAs. We've had periods of markup, consolidation, reaccumulation, and then markup again, right? We've basically effectively taken time to reprice the asset. I think it's very important for Bitcoin because, if you just go back to last summer, I think me and you would both agree that the mentality of Bitcoin being at 70K feels exciting. It feels expensive. It feels like something you should sell into, take some profits. I certainly didn't see after the ETFs going live that within 2 months we'd be at new all-time highs. I didn't see that coming. So the course of 8 months span, what happens is a mental reprice. It's two things. It's a repricing on the market as far as people willing to accept Bitcoin at 60K and 70K and 50K. And number two, it reprices us as traders day in and day out to say that, I'm getting used to seeing 60K, and actually 50 feels like a discount. Every time we, drop back in here, I feel like there's an opportunity to make money from the long side, right? I feel like there's opportunity to take profits on the, on the converse if we get up into the 70Ks. And that is what a successful repricing does. That's what's different about this cycle versus prior cycles, right? We're effectively consistently year over year repricing Bitcoin. And what I see right now on the mega high time frame of the weekly is that same uptrend. So I'm going to take that as my base case until proven otherwise. And where I would be proven wrong on this thesis is if we fail to reprice Bitcoin up here and we actually have to drop back into the last values, right? If we drop back into last year's values, I'll say, okay, that's probably a failed repricing cycle. And we're going to have to take some time to figure out a new narrative for Bitcoin. We found the marginal seller, we found the profit taker, we found supply, overcoming demand here. But what's more interesting, because we can't, this is the mega high time frame picture. This is more of like a wait and see kind of approach. But what we can do is trade on the dailies and the 4 hours. And I think if we're taking that same kind of repricing range bound thesis on Bitcoin, we kind of remove the EMAs from our trading and we say, can we trade this as a range? And I think a very clean range is formed here between 2024 value area high. Let me just pop this on here so you guys can see it. So last year we used our 2024 VWAP very cleanly for those 8 months, right? So we're retesting the 2024 value area high as our range low. The yearly open would be our range mid. And then obviously our first push to all-time high is our range high. And you guys can see how cleanly this plays out as far as a framework goes for trading ranges. Discount, premium, fair value, same concept if you're using volume profiles or anything like that with a value area high, value area low POC. I think there's value here in being long bias Bitcoin and being defensive at the highs if we're taking that same range bound approach. The thing I wouldn't want to see as someone who's a bull is, like I said, retracing all the way back into our last consolidation. For me, that's a big point of weakness. And if I could just pivot real quick just to display that idea here on Solana, one of the things that made me really nervous as a Solana holder is kind of the same concept of spending 8 months building value, breaking away, and failing to hold these new valuations, right? If you had a fight between bulls and bears for so long, there's no reason that the bulls need to come back and gather new recruits, right? So this was like a warning sign for me here on Solana. And this is what I would kind of propose would happen to Bitcoin if we do drop back into 60 or 70K. So for now, using this, like I said, this range is my bias and wanting to be long focused as we drop towards the lows. And if I could pivot away from charts and just use a little bit of psychology, the more and more bad news that we tend to soak and absorb, the better it is to build a bull case. The same as we saw last year with, number one, Germany selling, or the Israel-Iran war, Israel-Iran war, and the Japan-yen carry trade. We're holding kind of the same valuation. So if we have something like that over the next few months, again, I think it would pay to be focused on the long side of the book once again and be looking for discounts. So that's where I stand. Everything in between this for me is, as I'm attacking the market, is on an intraday basis and just playing mean reversion off the 2 standard deviation value area highs and value area lows. I'm going to stop there and take a breath because I think I just said a lot.
No, you said a lot, and I think it's really informative for a lot of people. If we could take a step back, maybe Doc, and
Mhm.
just understand like some of the terms that you use there. So you use like yearly open, you use this like VWAP level, etc. Is that like trial and error that's made you look at these areas, and how do you go about charting them as well for people that don't have it on their charts right now?
Yeah, 100%. So I came into just a quick, about me. I came into the market purely trading price action, and my goal was to kind of build something reliable, like an arrow in the quiver, if you will, something that I can rely on again and again and again. And then from there, it was, can I add anything to my system, or can I add anything to my trading so I can extract more value? Versus taking 1 hour shorts and 1 hour longs at range highs and range lows. Is there something that can give me more context to extract more value during a trend? That's where EMAs came in, right? From there, it's starting to use volume tools such as volume profiles and VWAPs and stuff like that, and seeing how other traders are attacking the market, if there's any benefit there or not. And what I like to do anytime I add something to my system is, can I simplify this in a way where I'm finding confluent signals between the 2 or 3 things that I'm already comfortable using? Are they aiding my decision making, or are they conflicting with my prior decision making? And that's how I've kind of built upon these things. So yeah, the VWAP's pretty simple. People aren't familiar with VWAPs. They're kind of the same concept of an EMA, but instead of factoring in just all candles and prices, you factor in volume and based on fixed time frames. So the big purple one you see in the middle of the screen is the entirety of 2024, using volume as your average price tool, volume weighted average price, excuse me. And then the bands on each side are your value areas. So it's like one standard deviation, right? Within one standard deviation of price on both sides of the average. And it helps you kind of take away some of the noise and some of the nuance of people going, is this range high with the wick? Is it the candle body? What time frame do you use your ranges on? And it takes away a little bit of that noise and helps you understand just like simply what is the context of the market. So I found that very valuable in my trading as far as clarifying things and building confluence between stuff. But how I've come to use it, again, yeah, it's the scientific method. It's try a bunch of stuff, develop a hypothesis, gather data, and then start removing things with lower and lower hit rates, and just push yourself towards the things that work at a higher hit rate and are simpler and cleaner, right? And don't add too much complexity to your stuff. So I hope it doesn't sound too complex. To me, obviously, someone who's done it for a little bit, it doesn't feel complex, but I think it can be if I'm explaining it too fast.
No, I think for a lot of our users that they have like a chart loaded up of, let's say, Bitcoin like you have now, and they're somewhat familiar with EMAs,
Mm-hmm.
and they're somewhat familiar with like RSI and looking at that. And
Yeah.
then they get a little bit stuck, and then they're like, okay, so what is this telling me? And clearly you explained it well, which is like how much price action took place, and at that price point, and was it with volume, because it's a clear like point of control or a clear kind of pivot area. um, for markets, a lot of business got done there. So if you had
Yes.
to just say your kind of 3 things that you really believe in now in your system, what would your like top 3 things be when looking at a chart?
Yeah, so I say this first and foremost to anyone who comes into trading: stick with the simplest thing first that you find fun and inspiring. And I think the easiest way and the best framework for most people is starting with price action, understanding market structure, understanding what a break-in structure is, understanding what a range-bound market is and a trending market, accumulation zones, markups, distribution, stuff like that. Basically, like the 101 on price action. And then you can begin to add indicators and tools that kind of clean things up. And I think EMAs are very simple and very easy to use. They just help you simplify things. Are we in an uptrend, right? What are the trends that are breaking us out of these consolidations, right? So if we're marking up from the 30 and 40K region, what is the most dominant trend along this move? When that trend is broken, okay, possibly we can enter into a more choppy regime, right? When that trend begins to carry us again, we're probably going to get a markup out of this regime. If we're debating, are we going to mark up, or are we going to stay in the range? Again, you can rely on trends a little bit. But there's nothing that market structure won't help you understand either, right? Break in structure, making a lower low, and not putting in a higher low, right? So it's lagging, but it does help clarify a lot of stuff, right? And it helps me develop a bias towards, is this time potentially a move that can help us break out of the range, or are we going to get confined to this range once again? And then the same tools again, right? When we're marking up and we lose those EMAs, okay, probably a warning sign that we're done with our markup, and we could end up in a little bit of a consolidated period for a little bit longer. So I would say, you asked for three things. I would say just, two, right? If I just wanted to pick two, it would be price action number one, EMAs number two. Everything else, is at your discretion, what you find interesting and what helps you kind of aid in the type of trades that you like taking. The worst thing that you could do as a new trader is put too much on your charts. You want to keep it as simple as possible.
100%. Great advice, Doc, and thank you for taking the time to run us through that. So a bit of a shameless plug on our side. How do you then think, by extension, this is how you're thinking about Bitcoin? It's in a range, and it hopefully doesn't lose that range. Otherwise, we're in for some big downside and a big period of consolidation. That kind of opens up the floodgates to pair trading. And I know you've shared quite a few pair trading charts in the past, but would love to understand how you think about pair charts and if you've got your eye on any in the meantime.
Yeah, so a big point of focus for me in this cycle has been the Solana BTC chart. I think you've crushed this top to bottom. I've watched you from afar, but I think this was a big aid for altcoins this cycle. Is Solana leading Bitcoin, right? Being the most dominant altcoin this cycle, the one that marked up the highest, the one that added the most market cap from, I think, dropping to $8. And this helped us, in two fashions, right? If Sol is beating Bitcoin, I think altcoins can run really hard, right? So it's always something that's been in my charts at the top in my objective category, something that I want to keep a scan on and keep an eye on. And as far as trading goes, this is something that allows me to take more risk with altcoins. When I feel that Sol BTC is not performing well, I want to take less risk. When I feel like Sol BTC is performing well, I want to take more risk, right? So that's one thing that I've used as far as pair trading goes. Similarly with ETH BTC, but as we both know, ETH BTC has been just in a generational downtrend. So there hasn't been too much value to derive from ETH BTC, which is why I think Sol BTC has been a much more reliable indicator this cycle. And the second thing that I use with pair charts is kind of relative valuations. So if I find something on the market, and this is the trade that I put on this cycle, if I find something that I believe can reprice to a valuation that another altcoin has, right? So for example, a good example is Hyperliquid, right? So if Hyperliquid, people want to value it not as a decentralized exchange, but they actually want to value it as an L1. I think there's a pair trade to put on there where you're long Hyperliquid and maybe short Aptos or short Say or another L1 that has already achieved that valuation, right? Say 10 billion or 20 billion fully diluted valuation when Hyperliquid drops on the market, dropping at whatever it did, I can't remember the exact numbers, but a lot lower, right? So if you think there's a valuation gap there and kind of like this fundamental arbitrage that you could put on, I think that's a really, really smart way to use pair trading as well. And like I said a little bit, is the trade that I put on this cycle was speculating that Pepe would flip Shiba or Shiba Inu, right? I thought that the new and shiny meme coin, the one that is more, I guess, well known in the internet culture versus the dog meme, right? It has a good opportunity to reprice into the top 10. And it came pretty close. It came within 40%, but it ultimately did not do that. But it helped me. Let's see if I still have this on here, because I did for a long time. Yeah, it was really solid. I think this is the flippening. So at the Pico top, only 40% away after coming in, from down here. So I think this is a really smart way, for me at least, to think about pair trading from a valuation standpoint, looking at kind of valuation arbitrage.
Amazing, I love that. And this Pepe Shib one was something I've been following yourself on pretty closely. And I think in times where the market seems a little bit tricky to read directionally, it makes total sense to put these trades on, right? So a scenario where you're unsure how, let's say, the Christmas festive period is going to play out and liquidity is quite low and volume's quite low, you can look at these Pepe Shib trades, and if you feel like you need to be in a trade, they trade pretty clean. That is pure trend that's going on that thing. And it's saying to me, if it's gonna go back up, it's gonna be now. That's how I see that. that
Yep.
chart as you're looking at it. And
Yeah.
how do you find these pairs, Doc? So obviously, like, do they just come to your head like, oh, I'm looking at a Pepe long right now, let me have a look at Pepe Shib? Is that how you think about it? You think about the long first and then what you might pair it with?
Yeah, absolutely. I would say that, what is the asset that I have the fundamental thesis behind? Like, what do I actually understand about the coin? And then what do I believe doesn't have that spark or narrative behind it, right? So if we're looking at, Hyperliquid and saying that Hyperliquid is the new and shiny thing on the market, well, what is out of mind share? What is not in the kind of Trump strategic reserve and the mind share of normies and stuff like that? And something like Arbitrum would come to mind. And I go, okay, this is probably not going to reprice the same way as something that's new and shiny, a lot of mind share, brand new, maybe undervalued. And then I would put that on the short side if I'm going to do something. So SHIB kind of falls in this category for me as far as meme coins go, because it's not quite Doge, right? It doesn't have that mind share. It's kind of the second fiddle dog coin, super high market cap valuation. It's not going to have these insane 10x pumps the same way a lower cap Solana meme coin would. So it feels like the safer coin to put on the short side. So yeah, to answer your question bluntly, I do think about the long side first, and then the short side would come second.
Amazing. Yeah, I've had something similar play out myself. There's been a few fundamental catalysts for Arbitrum, but in no way do I want to be an Arbitrum outright long right now, because it's ETH beta. These layer 2s have not really played out as a thesis, and being Ethereum aligned just has led to underperformance. And so I've been putting on these pair trades, which, let me actually present my screen for a second. Let's go here. So last time I forgot to add myself to the stage. Let me add my screen to the stage. I need to remove you first, Doc. Sorry, I'm going to add myself. So users will know that last time we put $1,000 in this Hyperliquid account and $1,000 in this pair trading account, and I've completely forgot about it. But these trades that we put on the last stream have done pretty well. So we did Bitcoin Starknet and Bitcoin Sui, and the rationale there was pretty much what you were saying, which is I wanted to be long Bitcoin, but the market looked a bit frothy, and particularly alts, and so shorting alts against it made sense. These are not the most correlated assets, and so to your point, if I was looking at something like ARB, my initial thinking would be, okay, how is ARB performing against another? The first asset that comes to mind is something like ETH, right? And looking at your charts, so this is hourly. Let's zoom out to something like the 4-hour. Way too many tabs today.
Computer overloaded between streaming and everything too, right?
Yeah.
Uploading, yeah.
And this is amazing, right? Like ARB has completely underperformed ETH. So if you were to do it the other way, actually, you could have been long ETH and short ARB for a very long time.
Better than ETH USD, man.
Well, this is exactly the thing, right? Like if you had a thesis on being long ETH this year, but it hasn't really played out, these kind of trades, like being long ETH and short ARB, let's say since the start of 2024, look here. This has been like a 3-year.
Holy crap.
on the pair trade, right? And you've been long ETH. And you'll have also been receiving funding at some point, because you're paying to be long ETH, but you're receiving funding on one of the other legs. So these kind of opportunities really present themselves. And so if I look at what I saw more recently, which was I want to get long ARB, and I find something like Starknet, which has been one of my favorite short legs, these start to become a little bit interesting for me on higher time frames, because I can find a way where I can express a long ARB view, but I can offset that risk with some kind of ETH beta. It's very good thinking that you've raised our attention to. Are there any long legs that you're looking at right now, Doc, which could be paired quite nicely?
I think there's a couple interesting coins in the market that have shown some relative strength. One of the ones would be Ondo. I don't know if you pay attention, but like a lot of coins have fully retraced their pumps, and Ondo is one of the ones that seems to be holding up better than the majority of the market. It hasn't actually come all the way back down to these old levels, right? And as long as it continues to round off here and maybe break some maybe break back the daily trend, I think it's very interesting to be looking at, right? There's other coins, obviously the new and shiny would be Bera, right? New coin markets not knowing exactly how to value it, providing a lot of volatility, both to the upside and the downside. XRP, which I reluctantly want to say looks good because I don't want I don't want to be bullish XRP, but I think it looks like one of the better coins in the market, and it has that narrative with the Trump ties and stuff like that, and Brad being in Trump's ear. So I think there are some pretty decent coins on the market, but I'd say 95 to 99% are probably not worth trading on the long side at the moment. As far as swing trades go, definitely scalp intraday, maybe a 1 or 2 day hold, but nothing I want to be swing long at the moment. Actually, one may come to mind is Hyperliquid when it's trading all the way back down into this daily demand, right? I think there could be a decent bounce here. Sellers have been in control for almost a 50% move, so I would expect some kind of short-term strength here when we get into the 14.5 region.
Interesting. And how are you positioned on Hyperliquid? Did you manage to catch that trade?
I put half size spot position on this morning at 15.5, which is right around where the price is, but I want a little bit of a selling climax. So anytime I look at demand blocks, I want to see a big puke into it. It's any kind of absorption being shown up that some aggressive seller is coming in, and they're unable to move price in the same manner, as they've displayed that conviction directionally, right? So basically coming in, either selling a bunch of spot or shorting the coin, and basically getting soaked on the passive side, leaving a wick, something like this for me to work with. That would be where I'd put on the full size position, easy invalidation underneath the demand block. And another thing that I like to use, like I said, confluence of EMAs. So we have a really clean, let's see if I can, there it is. Give it a second to load. Really clean 4-hour downtrend, right? So if this 4-hour downtrend, if we like round off here and we break through this 4-hour downtrend, I'd be looking for a pretty clean gap back up to the daily, right? And that would be something that I'd want to extract, be defensive once we get up here once again. So this is a trade that I've been looking at. And like I said, I just scaled in a little bit just because I feel like it's at a discount and it's very, very close. One thing about really good either long or short-sided trades is when a lot of people are looking at the same levels, if that trade is going to play out, a lot of times people want to front run those levels and you won't get these perfect fills. So it's just something that I wanted to keep a little bit in mind of, is we are coming to those levels that I've been eyeing for over a month, maybe 2 months now. And I want to take advantage while prices are down here. If we're going to get any type of bullishness, I think this would be the location to be kind of bull curious, if you will.
Bull curious, great term, especially in these kind of markets. I guess a final question then on execution side of things, Doc. So let's take this example of Hyperliquid, which you're looking at here, and you've got this kind of area of a selling climax. How are you positioning for that? Do you have limit orders just vesting and you kind of walk away, or do you look at
I'm not a huge believer in limit orders, right? But I really want to know the reaction that I'm getting, because as a trader, the first thing I want to ask myself is, where am I wrong, right? So as it stands right now, I'm wrong all the way down here, right? Because I have no type of low time frame setup. I don't have a 4-hour setup. I don't have the 4-hour trend on my side. All I'm looking for right now is, can I get a selling climax? And once I get that, then either the wick, the reaction, the market structure break, the breaker on low time frame that forms becomes my invalidation. And that determines the amount of size that I want to put on the position. The wider my invalidation, the less size I can put on, because the more opportunity there is for me to be wrong, which makes it a wider stop loss, right? If you can get a tighter stop loss, you can put on the same risk. with bigger size, right? So that it really informs how I position based on the price action that plays out, which is why I don't particularly love limit orders, because you're kind of predicting that you know what you're going to get without actually getting it. So yeah, my execution would be more of like active, maybe limit scale if I get a breaker into something that's like a lower time frame setup, or just played out market order. I'm one of those guys that doesn't really care about the fees too much. I'll market order in.
There you go. Great to have you here, Doc. It's great to hear your perspective on the market and how you think about the majors like Bitcoin and then Bitcoin Sol as an extension, and then how you pick your long assets, whether it's Pepe or Ondo, and look to pair them with something in a highly correlated sector as well. So I think we'll let you run off and enjoy the rest of your Friday. Any last thoughts you want to share with our audience, who are mostly people looking to learn about pair trading?
I think you're in the right place. If you're looking to learn about pair trading, you've come to Huff. I think you're in the right place, man. I've seen Huff kill it with eccentric pair trades, things that people don't think about, for over a year now, and I think it's pretty cool to watch. I remember, about a year ago when I wanted to put on the Pepe Shib trade, there's no place that I could have done it, like other than making like kind of a synthetic pair on a centralized exchange. But Pair Protocol actually allowed me to take that trade where I'm longing Pepe and shorting Shib on the same exchange. So I think that's pretty cool, man. So yeah, man, I think enjoy the rest of your stream, Huff. Thank you for having me on, man. It's a pleasure.
No, it's great to have you, Doc. Enjoy the rest of your day, man. Thank you so much.
Take care.
Take care, dude. What a dude. We love docXBT. So I'm going to tease something a little bit here. We talked a little bit about hype pairs. So this is our Hyperliquid integration, which is currently being worked on, but you will have hype there. So as an asset which you can trade, as well as every other thing. And so what Doc was saying, for those that didn't really catch it, is he picks an asset based on the single chart that he wants to be long, let's say hype, and then he thinks what is correlated with that. So something like another layer one, maybe, in fact, we're going to have categories. So you could have a look at stuff like SUI, for example, and have a look at how that chart has been doing over time. And clearly there was like an opportunity for repricing when this thing launched way back in December of last year. The other thing that we'll be doing is sometimes you don't want to just be 50-50. Sometimes you might think, okay, let me tilt this towards 55-45, and your trade, we can do that. Once we place this order, you can see it's split like a little bit more weighted towards hype and SUI. And then the other thing that we'll be doing is adding some information here to show you the correlation between the two assets, and also show you something called the hedge ratio. So over time, how much more beta or how much more volatility does hype have than SUI, or vice versa, and that will help you inform how much to size it. So by default, most trades have been 50-50 as of today. But if you think about a pair, like let's say being long Bitcoin and short SUI, clearly you don't need to be 50-50 short, because SUI, when it does move, moves a lot more. So you might want to be something like 55 Bitcoin and 45 SUI. And again, having information about beta and correlation and volatility and stuff can help you size that. And then the same kind of concept. So this is all with the Hyperliquid order book. I am going to have the ability to, here's some trades I had earlier, Bitcoin SUI, Bitcoin ETH. I'm going to be able to do TWAP orders as well. So a little bit of a 24 hours. Let's get into one of these trades, like Bitcoin ETH. So a little bit of alpha for anyone who's following pair and what's going to come on that side of things. But it's also an extension of thinking about pair trading in a much more professional manner. So the default is this, which is 50% long and 50% short. So $25 and $25 if you're doing this. And that is something called being dollar neutral at inception. But the extension of that is being beta neutral, or being even vol neutral. And these are things which we will introduce over time to pair. So that's something that I've been working on, and I'm excited to bring to pair. Now let's present my thoughts on the market here. As many of you know, I took a Bitcoin long earlier today, which I'm underwater on currently, and I can explain why I did that trade. In a second. So this is Velo, as you know. So one of the things I was seeing on Velo, especially on a shorter time frame, is here you have spot since pretty much last night. So around here, this was like here. Sorry, I should zoom into a shorter time frame, 5 minutes. This was the daily open at midnight, right? And you saw basically them confirm that there was going to be no net buying. You saw this huge spot selling coming down, and then ever since then, the blue line spot has been accumulating Bitcoin, whereas perps have kind of not really believed it and have been shorting and shorting and shorting, and are now starting to catch up, as you can see in funding rates here, and we're hovering around 88k. So my thinking at the time, which is when we were kind of around here, which was about 89k, and obviously we had this breakdown down to 86 and a bit. I didn't get stopped out, which was nice. My thinking was basically a couple of things. Number one, that there's been this consistent spot buy pressure, whereas perps were kind of shorting this thing, which is always interesting. The other thing for me is when you think back to last year, we had this whole anxiety around Silk Road coins moving, and then you had the band meet thing coins moving, and like just constant headline risk from the US Marshal Service and from the DOJ. And that risk, actually, like $18 billion of sell pressure being removed from the market, is actually a really, really good thing. It removes one of the big exogenous risk factors that was in the market, which was the US government at discretionary elements or discretionary times just selling Bitcoin, just like Germany did. And so I actually think that people are kind of mispricing just how big news that was. And if you had even a 5% weighting to the fact that they would be buying more Bitcoin, I think that was like an incorrect narrative that got spun up. This idea that they can find budget neutral ways to do it. I was doing a little bit of research today, and budget neutral stuff, clearly like raising no new money or taking any money from taxpayers. There is a handful of things that they can do to achieve that. And I think over the next couple of weeks, you might get some headline risk like, they are thinking of working with miners to acquire Bitcoin supply in exchange for some kind of tax benefits for the miners or whatever it might be. They could look to use the exchange stabilization fund at the treasury. They could look at doing something like swapping some of its gold exposure to Bitcoin at its discretion, which again means no like net new debt or taxpayer funded purchases, and just a myriad of like 8 to 10 things that they can do in a budget neutral way to acquire more Bitcoin. And there's two people that have that mandate. So you've got the Treasury Secretary and you've got the Commerce Secretary. And if you know anything about the Commerce Secretary, Howard Lutnick, you know he's in bed from Cantor Fitzgerald. He's in bed with the Tether guys. So piecing all that together, I think I'm pretty much break even now on my long here at 88.5. Talking about how we think about markets is obviously in the context of risk rewards. So I'm wrong at 86.5 on this, and my target was up like 92-ish. Let's go to a different time frame. Yeah, my time frame was actually closer to the yearly open for this, so above 93k, which represents like a 2.4 risk to reward ratio. So that's the trade I took. Obviously, I kind of sat on this downside right now, but I do believe that Bitcoin is the superior asset to own. And clearly there's a narrative on what you want to short against it. So for a long time, I've wanted to short Solana. I still believe that to be the case, although Solana is showing elements of finding some support here, down here with this kind of divergence that's playing out. The first things that come to mind are the things that are no longer beneficiaries. So stuff like XRP, Cardano, which I don't even think I have on my list. of stuff. But those kind of pair trades where you're long Bitcoin and short another major against it, even the age-old classic, which is Bitcoin ETH. So let me see if I can share the pair UI. Stop that screen share. And have a look at Bitcoin. So Bitcoin's the asset I want to be longing. You can see this is my Bitcoin trade that I'm just slightly in the money in now, but let's switch to the one that we had for the stream. So I want to be long Bitcoin and short something else against it. And I think stuff like XRP from a narrative perspective makes sense, but from a chart perspective, it looks pretty horrific to be longing this. So the no-brainer trade has been this one. It's been the kind of go-to trade for many people, and there's no reason to say that this trend won't continue. So being long Bitcoin and short ETH at the same time. And so that would be my go-to trade for expressing this long Bitcoin view. These are trades from the previous stream for the reasons why I mentioned there's some fundamental analysis at play as well. If I wanted to outright long Bitcoin, just as a reminder how I think about that, is to use some kind of TWAP order. And again, let's say I want to do $1,000 of this, and I want to do it between now and the end of the US session in 2 hours and 20 minutes. Smallest TWAP must be a minimum value of $10. Cool. So that TWAP is running, and you can see the details thereof. What else shall we talk about today? So narratives. Let's talk about narratives that are at play in the market right now. Before we do, I'd actually like to touch upon the markets page. So the markets page we just launched, and essentially you can sort now all the pairs on Pair Protocol. So we have over 70,000 pairs, and you can see, and you will have to give it a while because it's sorting between so many pairs, that the highest pairs on return today are something called auction and against layer. You can also sort by the inverse of this, so which pairs have been absolutely hammered today, which I imagine is just the inverse of those things. Yeah, so long layer, short auction. You can see which pairs have had the most volume today on Pair Protocol. So yeah, we've had a lot of people trading just outright long Bitcoin. We've had some people trading Bitcoin ETH, which makes total sense. Let's do one on stream here right now as well. Don't even think I've got the minimum to trade that. I need more. I'll close one of these. ARBOP, people are trading, and it's slightly down on the day, but presents an interesting opportunity to add to that. Bitcoin, Litecoin, etc. So you can use the markets page to see what other people are trading, and clearly people are trading Bitcoin, they're trading Bitcoin ETH, they're trading ARBOP, etc. So if you're looking for ideas based on what other pair traders are doing, you can always come here and see what's been going on. One of the most interesting things here, however, is when you're pair trading, let's say you're longing Bitcoin and shorting ETH, most of the time you are paying funding to be long and receiving funding to be short, because generally speaking, funding rates are positive, which means you have to pay to long and you receive it if you're shorting. And so you can see here for Bitcoin ETH, it's relatively tiny, and you have to pay a little bit every 8 hours to be in a long Bitcoin short ETH trade. But if I sort here across the whole platform, I can see, wow, there's trades like long res, short cis. I don't know anything about what res is, but clearly people are shorting this thing, and they're shorting it a lot, so much so that the annualized net funding is in your favor. So green means in your favor, green means you get paid. and clearly these reset every 8 hours, but right now the annualized amount is about 700% per annum. So there's, generally speaking, what you want to do is you want to sort net funding, find the trades that you're going to get paid to be in. And Res is a great example today because there's trades where you can be long Res, everyone is shorting it, so you're getting paid to be long, and then short something else which people are longing, like BCH or Litecoin. And not only do you get paid a very nice annualized rate to be in that trade, but you also can do quite well. So these trades have been going up over the past 24 hours. I'll just pad that out. So if we look at something like Res Litecoin, and we look on another platform, how you would have had to do that previously is you would have had to go to something like Velodata. I would have had to find Res, not Rex, Res. And I can see here, this is an asset which people are very aggressively shorting. So you can see by the aggregated funding rate. You got to be a little bit careful because clearly Spot are selling this thing and perps are starting to build some exposure towards it. So it's probably a little bit late. But this is why you're getting paid that net funding every 8 hours, because people are really aggressively shorting this and you're taking the long side. And then if I take a look at Litecoin, and I imagine there's some like ETF hype or something like this, there is positive funding going on here. So what's happening when you look at the markets page is that analysis will already be done for you. And clearly it'll come up with an opportunity. If I sort by net funding in this column here, I can find across the entire market that Res Litecoin is an asset which I am going to get paid very handsomely. And I can go ahead and go and trade this. I can see what the chart looks like for confirmation, which looks like this. And you're getting paid because you're taking a trade where the shorts are likely to get squeezed and you're long. And the longs that are longing Litecoin are likely to get liquidated, which has been the theme of this market for quite some time now. So let's maybe, just for the sake of trying this thing out, do a little trade of Res Litecoin and using the markets page to find these kind of trade ideas. More recently, by the way, the most heavily shorted stuff has been things like Bera and Kato as well. So again, if you want to take a contrarian long trade, those trades pay you to be in those pair trades, and you have some kind of offsetting risk. So let's look at Bera chain versus something like Zcash. You are getting paid about 25% per annum for a trade which is actually going up over the past 24 hours. So these are interesting trades, and then clearly you have to come directly to pair and have a look what's going on here. But a lot like what we said with docXBT, which is you want to build a thesis, right? So Bera chain as an alt layer 1, is that due a repricing relative to something like ETH? And over the past hour, the market doesn't think so. But what's the trend here, right? Is that thing going up? And these are trades which the markets page can really help you try and find. Try and avoid the 1 hour or 4 hour, 1 hour charts, which are there by default. You want to find some longer term charts to really get a sense of what's been going on. So that's how to use the markets page, and something I'll be using a lot more going forwards, especially this concept of using funding rates to find things. The final thing I want to say about the markets page is you can now set your favorites. So even if you're not pair trading that often, you can just set your favorites and then come back to these and keep an eye on them. Forgive the slowness. So I've just put a whole bunch of random ones here, like ARB stock, Bitcoin ARB, etc. But you can basically keep an eye on some of these and see what's been performing pretty well. So even if you're not actively pair trading at the moment, at least come to the markets page, favorite some pairs that you might want to take a look at, like Near or Bitcoin Sol, which docXBT was just talking about. And then from here, you can just observe, right? So most people are on TradingView all day long, and I don't expect most people to change their work. What I'm definitely doing on my side is I'm coming into the markets page, I'm looking at my favorites, I'm looking at the 24-hour price change, I'm looking at the net funding situation on that thing, and I'm looking just as a founder myself, are people trading this thing, right? Are people trading ARB stock, which they are, is the open interest there, etc., etc. So that's the markets page. Let's talk generally about the markets and how I see things. We talked a little bit about Bitcoin. And I largely agree with Doc on the higher time frames. So looking at like, let's take the 3-day, for example, it's trying to get back in this range. So I've had this as a range for a while between 100 and 90K. Bitcoin's trying to get back into this range. And there's some levels that I'd like to see taken out, like the yearly level, the weekly level, and back towards the top of the range around 100K. And then you've got this monthly level, which I know we're early into March, but we've kind of found some support here today. I do think that they've taken liquidity once and twice already through that level. So I think Bitcoin's trying to get back into range here. And if there was any asset that I want to own across all this shit, it's definitely not something like ETH, which is in a clear downtrend. And the moving averages will tell you that. This moving average cross here is quite scary for those people that know what I use those lines are. That's across of the red, so the 200 and the 89, which, you know, it's trial and error, but essentially moving average crosses trigger a lot of these momentum algos as well. And so you just get even more selling pressure coming from that. So ETH is a real dogshit asset that is good for your short legs, and I don't see any major catalysts coming for ETH, unfortunately. I am in some ARB pair trades. I have talked quite a lot about my rationale for doing that. It's much more fundamental in nature, but again, outright longing something like ARB here, I would be really hesitant to do it because the longer term trend has been really kind of negative. But I am in some trades, ARB OP and ARB STRK, and I'm happy to keep adding to those trades. Hype is an interesting one. So I largely agree again with Docs, except I think we've had the selling climax. I think this price action that we saw earlier today was that down here at like 14.7-ish. And if I'm constructive on Bitcoin, then I'm of the view that you are going to see hype try and make a move back towards 20 from here. So thinking from the perspective of risk reward, and I would keep my stops fairly wide because you might get a little bit of that. But that presents like a 2.1, so yeah, 2-to-1 kind of risk reward ratio if you want to take that trade. So yeah, being long hype makes sense to me. Elsewhere, really disappointing on some of the ETH beta, like Lido is one, and you know, I might just remove this from my watch list because it's been a real kind of dog. XRP, interestingly enough, speaking about EMAs, it's hugging this EMA here, and even though it's been confirmed to not be part of any kind of strategic crypto reserve other than anything that was seized or whatever, it's hugging a trend, and so I wouldn't want to short this. I think there's much better short candidates out there. Like I said, the best ones at the moment are stuff like ETH as well. Bitcoin dominance. This is something that all pair traders should be looking at. You can find it just as BTCD, and it's just been trending up and up. And this idea that Bitcoin dominance is going to come down, let me get rid of this. This idea that Bitcoin dominance is going to come down to like 58, or even 50%, and you're going to get this full-blown alt season. I'm no longer in that camp. This is clearly telling you that other than this little fake period in November last year where we had the AI agent meta and Hyperliquid launching and things, there's a clear uptrend here, and there's no reason why, in my mind, Bitcoin dominance can't go back up towards 65, 70 kind of region as well. So again, another reason why I want to be long Bitcoin and short some kind of real dog shit stuff at the same time. Let's talk quickly about token unlocks and if there's anything interesting happening on that side of things. Because token unlocks clearly are sell pressure, systematic sell pressure, and can represent a good opportunity to short something. So let's have a look what's going on there. So this is Tokenomist, which is a paid, I'll load it up first, is a paid service, but essentially you can sort all the crypto unlocks and emissions and what is going on. So I tend to go over here and I can see what's upcoming. And so how to read this is something like Move has an upcoming unlock in a day from now. It's going to be 2% of its circulating market cap, so quite a big unlock. Only 23% of the tokens have currently been unlocked, and it's got this huge valuation at 2.5 billion, but it is up on the day. And so blindly following token unlock data can be a bit tough, because there's this concept of like projects doing all they can to create a bullish unlock. It's either like news that they release, or it's something that they work with their market makers to squeeze some shorts and things. But if you're looking for short leg ideas over the coming week, let's just have a look who's got unlocks, any meaningful unlocks. So Eigenlayer, which is ETH beta, I think this can be an interesting short leg for you. ENA, which has had bullish unlocks with its kind of tokenomics revamp. So again, you've got to be really careful in just blindly selecting a short leg based on token unlocks. But ENA had been one. Aptos, again, I wouldn't touch because of just a whole bunch of mind share that it's getting from that from that dude who is trying to do a community takeover on it. So Aptos I wouldn't look at. Vendor is interesting, especially as a pair trade against anything else in the AI sector. So I think if you've got your eyes on something, an AI name, then Vendor can be an interesting short leg, although it's a really small unlock relative to its market cap. So although nearly 2 million, 1.86 million of sell pressure seems like a lot, relative to its market cap, it's really not. It can absorb that, and that's another way to read all of this. And I teased it last time, which was there's all this data everywhere about token unlocks. There's all this data everywhere about. One second, I'm not sharing anything. About technicals, RSI, and overbought conditions, and open interest, and liquidations, and all this kind of stuff, right? And how do you piece all of this together? So the markets page, which I showed you, is the first of many things that we'll be doing to really help people make much more informed choices when it comes to pair trading. The other thing that we'll be doing is launching Agent Pair. I did show it last time, so I'm not going to show it again. But Agent Pair is getting even better now. So Agent Pair is going to be integrating with something called Crypto Wizards, which I didn't show last time, and so I will today. But Agent Pair is essentially going to integrate with this. And so if I take a pair like ARB STRK, what Agent Pair will do is it will bring in data, and I alluded to it a little bit with the 50-50 ratio thing, but it will show you the correlation between the two assets. So these are highly correlated assets, which is perfect for me. It will show you the hedge ratio, so how much more volatile is ARB and Stark, and how should I size it. It will show me the long-term beta, and it will show me some backtest results as well. So if we can bring this information in systematically for every pair that you might select, like ETH Sol or whatever it might be, it can really help people make informed decisions on, is this a highly correlated asset or not? how should I size the long leg versus the short leg? What do the back tests look like? What is the Z score at the moment? Which I don't think is here. Z score, yeah, you have to go on here. What's the Z score with like negative 1.5 being worth longing that pair and positive 1.5 being shorting that pair, and a whole bunch of other things as well. So our next big unlock for agent pair is going to be bringing in all this statistical data, but doing it in a really user-friendly manner. So just high signal and much less noise. So the key things that you care about are these assets co-integrated? Are they correlated? What's the Z score like at the moment? And really coming up with ideas on the back of that. So that's something that's been cooking, which we're really excited about. I will wrap up, generally speaking then, which is we're about to enter the weekend. And so my thoughts for my Bitcoin long are I want to probably close it soon. I'm just back in the money on it, so I don't really want to carry risk into the weekend, especially with Trump and anything he might say about tariffs or anything that Putin might say about Ukraine this weekend. And just generally speaking, weekends are like really tough and choppy price action. I'm in these two pair trades, which are down on the day. I'm not really that worried about them. My thesis is a little bit longer term on ARB OP and ARB STRK. This STRK one is even better. The Starknet one is much better than the OP one. So if I'm going to be adding, it'll probably be to this pair trade. What's encouraging here is I think the S&P, not the meme coin, is bouncing off the 200-day moving average. So here I'm on the daily time frame, and my EMA is for a period of 200, and so this would be the 200-day EMA. And can you see how it like faked out here? High Stakes Capital spoke about it a little bit today, but this was like peak bearishness today. Once we went down here, people thinking, oh my god, equities are like gonna get slammed. And it's coming back a little bit into the close, into the US close. So it's one of the reasons why I'm happy to be pro risk and have my Bitcoin long position running at the moment, is just because equities seem to be bouncing off this kind of level. The other encouraging thing about equities today is Trump said some more stuff about slapping on more tariffs to Canada, and yet the market kind of didn't move downwards. In fact, we kind of bottomed off it when he said it, which was down here. So nice to see the S&P reclaim the daily level and actually be green on the day, and I think that's translating over to crypto land. So I'll wrap up the stream there. Happy to chat to anyone in my Telegram channel. If you're not already in there, basically I have Huff's house. You can find it. It's pinned on my Twitter account as well, and I just share everything that I'm thinking about the markets there in real time. And then there's obviously a chat room as well, so you can talk to me and ask me anything in there. So that's probably the best place to chat to me about whatever's going on in the markets, and we can go from there. But with that, I'll wrap up the stream and say enjoy your weekend, guys. Ciao.